Now we're going to talk about tax deferral strategies. The idea behind tax deferral is that it doesn't necessarily change the amount of tax that you owe. It means that you earn income, you have some profit, you incur a tax liability today, but you don't actually write the check to the IRS until way down here, essentially at a time of your choosing. And so all along the way, from there until the time you actually choose to write that check, you have all this money piling up. You have the ability to reinvest that those untaxed earnings back into your business, to buy new business. What Peter was talking about earlier, he said, I've got this huge advantage over any other company that's having to pay, he was paying 50% before when he was in California. And it's paying 50% tax. I got this huge advantage because now I essentially have twice as much money to go out and reinvest in my company, to market, to buy out other companies. Peter's in this position to do that, so it can really help grow his business because he's in the position to do that. You're able to do the same thing. Anybody can do this. This is one of the things that, again, Google and Apple and all these companies do. When you guys hear about this in Congress, they say, oh, there's all this money, these tech companies are holding trillions of dollars outside of the United States. That's what they mean. What they mean is that, Google has this company, this big profit center in Ireland, where tax rates are extremely low, or some company might have something in Switzerland or the British Virgin Islands or something like that, where tax rates are zero. And what they're doing is they're booking all the profits there. So the company's generating billions and billions of dollars in profit, and it's not getting taxed, or it's getting taxed at a very, very low rate. Now, who owns the company? The company has all these shareholders, maybe a parent company in the United States, and the parent company's traded on the stock exchange and so forth. But the money never goes from Ireland back to the parent company in the United States. It never gets transferred back. Because if it gets transferred back over here, it's been taxed at a very, very low rate. Or in a place like St. Lucia, where it's not taxed at all. That money never gets transferred back to the U.S. parent company, because if it did, it would get taxed at
Right.
corporate tax rates, U.S. corporate tax rates, which are among the highest in the world. The highest in the world. And so all the big companies say, no, we're not going to do that. We're going to keep the money over here where it hasn't been taxed. And so Congress keeps saying, well, you should bring the money back. And they say, well, just, give us a reason to. We'd like to. We'd like to bring that money back. We'd like to bring that money into the United States and invest in the economy and create jobs and build out more infrastructure and improve the business. But there's no way we're going to give you half of the money. That's crazy. Mm-hmm. And so there's been a lot of negotiations about some kind of option to try and reduce those and give people an incentive to do that. But that's ultimately what we're really talking about here, is these businesses that are essentially generating billions and billions of dollars in profit and holding all that money overseas, holding all that profit overseas in a jurisdiction where they're not paying any tax.
And there was a holiday back in 2004, I guess, where, again, and sort of what the big companies sort of bet on, and probably rightly so, is that from time to time, Congress they'll be able to lobby Congress enough to get a preferential rate to bring it all back, and then they start the whole process over again. And again, I think, as what Peter said, he's looking at his U.S. businesses as a cost center, and that goes exactly with Google. All those bright young people in California at Google inventing the future, that's a cost center. It's not a profit center, right?
So the idea is that Google has a company overseas that's not really paying any tax. Then they have all these people in Mountain View, California. There's a contract between these two companies. So Google in California charges money to the company overseas that pays a fee for the services of all these smart people in Mountain View, California. But the rest of the profit stays here, untaxed. Does this make sense? Don't be afraid to raise your hand if it doesn't make sense, because I'm going to go to the easel and try and draw it out. Does anybody feel like that's necessary? Yes, okay. Can you guys hit me up here? If I do this, do I need to move it? Okay, all right. Now, I never won any awards in art class. Okay. This is you. Okay, and you're paying really high tax, so you're not very happy. Now, you have, right now, you have the U.S. government right now, and you're having to pay all this money to the United States government, right? So you've got money coming into you through a U.S. company, let's say $3 signs, and one of those dollar signs is going to Barack to finance wars and bombs and drones and body scanners, okay? Make sense? This is the current situation. Now what we're going to do is we're going to set up another company. Let's say we call our friend Rory in St. Lucia. Okay. Now you've got all of your customers that are paying, for whatever it is that you're selling, maybe financial services or magic markers, whatever it is that you're making. You're generating income from here. And so now that money goes into the St. Lucia company. Now all the income essentially going into St. Lucia. Make sense? So the St. Lucia company is generating this profit. How much is the tax rate here? 0. Okay? So now all the money is staying here untaxed. Do you have to live in St. Lucia? No. No, you don't. In many cases, and Rob will be the first person to tell you, you need to be careful about this. It needs to be properly structured. But it's possible for you to have a company where the company is based in St. Lucia, it's generating profits and so forth, and you do exactly what Google does, which is maybe you have a U.S. company here, and a portion of that income, you're living here in the United States. That's you again. Now you're a lot happier. I'm going to show you why. So a portion of this money goes here to the United States. Okay, so you get to pay marketable fees if you're providing some services. You have a company, a U.S. LLC, that's providing some services to the St. Lucia company. And it has to be a marketable fee. You can't pay yourself $1 if you're actually performing some kind of managerial services.
Or credit card processing.
Credit card processing, and anything, you have to pay a real fee. And then the U.S. company is going to pay some tax to the U.S. government.
But again, it's tax on reasonable profits.
On this money.
For the functions, but only those functions being performed in the U.S. Now,
so the U.S. LLC is paying tax on this amount, not on this amount.
And just a couple of things here where we talk about being careful. The St. Lucia company cannot be doing business in the United States. It can't be concluding contracts in the United States. It can't be transferring. There are ways to handle all this. It can't be transferring title to goods in the United States. You can't manage the St. Lucia business from your kitchen in Philadelphia.
Rory,
That's not okay.
Rory, why don't you go ahead and come up now? It's about time we introduce you to Rory McNamara, who came from St. Lucia. Rory is an attorney in St. Lucia. Yeah, go ahead. You have a seat here. Rory's an attorney in St. Lucia, and
good afternoon.
I was gonna get into this. Again, what we're trying to highlight here is sort of a big picture educational overview, so you understand. The idea isn't to take this information and then just go back home and set all this up and do it yourself. Everything needs to be properly structured, and if it's properly structured, this can be an incredibly effective tax strategy. Rob mentioned a very good point, is that the idea is you have this company in the U.S. and you're running the U.S. company. The St. Lucia company needs to be managed from St. Lucia.
Or outside the U.S.
Or outside the U.S., ultimately. One of the things that the IRS really looks for, you pointed that out very clearly, is concluding contracts. If you're sitting in the United States, if you're living in Topeka, Kansas, and you enter into an agreement, a contract between the St. Lucia company and maybe some supplier or manufacturer in mainland China, for example, then you have just entered into a contract on behalf of the St. Lucia company and this Chinese company. So you have just essentially done business on behalf of the St. Lucia company in the United States. That's a big no-no.
It produces a very bad tax result.
Right, produces a very bad tax result, potentially branch profits tax.
Triple
minimum,
taxation.
Right, triggers U.S. taxation on your St. Lucia company. So you want to avoid that. If properly structured, It's a completely manageable situation. People do this every day. The largest companies in the world do this. Again, this is why Google is able to, this is Google. Instead of St. Lucia, they're in, what, Ireland, BVI?
In Ireland.
Wherever they are, yeah. So this is Google, this is Ireland, and here is Mountain View, California, and this is exactly what happens. All the money that Google earns goes here. And then they pay a fee to cover all the salaries and everything in Mountain View, California. They pay taxes to the U.S. government on this amount, and all the rest of the money stays here, offshore, at 0% tax. Make sense? My mother says it makes sense. Does it make sense to anybody else? Okay. All right. Okay. I want to talk about this. I put St. Lucia here. There are a number of different jurisdictions that we can use. We hear about these all the time. You know, if you look up offshore companies and so forth, you can see you'll get a laundry list. You'll get Panama and Seychelles and BVI and Cayman, all these different companies. Is there any difference between these? Yeah, there is. There are a lot of differences, honestly, and a lot of things that what people really look at. One of the things they really look at is price. The cost of setting up the company and maintaining the company, sure, that's a factor. You don't necessarily want to be getting into one of these places where you're going to have to pay $10,000 a year. And there are plenty of people who do this who will happily charge you $10,000 a year for your company in XYZ jurisdiction. But there are a lot of different reasons why you might want to be in one versus the other. And the price isn't necessarily the number one thing on the list. It's on the list, but it shouldn't be the number one thing. One of the things that you really want to look at is if the jurisdiction has a comprehensive tax treaty with where you're based, where your home country of taxation is. If you're from the United States, for example, there are a lot of very low tax places that you can go to, like Switzerland, even many of the Baltics, Estonia, for example, Lithuania, Bulgaria, which has a 10% flat tax rate. There are a number of countries that you can go to that have a very low tax rate. Ireland is another example. The United States and Ireland have a comprehensive double tax treaty. And what that means is that you can use that tax treaty sort of as legal protection and say, hey, look, I'm following everything in the tax treaty. And if you follow everything in the tax treaty, then you have a lot of protection. You have this sort of brick wall around your entire structure that protects you against any conflict really with the federal government. And that is a bit of an insurance policy because those double tax treaties are generally with places that have some tax, not necessarily a whole lot. They don't have any tax treaties with countries that have zero tax. And it doesn't mean you can't do this. You can still do this. But in general, the countries that they have comprehensive double tax treaties with are France, Italy, the usual suspects. But there among those, again, are places like Switzerland or Bulgaria or Ireland or Estonia or these places, Cyprus, that have very low tax rates, and so you can get a lot of protection. So in a way, paying a little bit of tax is somewhat of an insurance policy for you to make sure you don't run afoul of the regulations. So that might be an option for you to look at one of those jurisdictions. So how do you know that's right for you? Well, if you want to make sure that you have the extra protection in having that double tax treaty, if that's something that you think might make you sleep better at night, knowing that you have that. I remember when Rob and I, years ago, when we first started talking about this, that was one of the first decisions that I had to make was, do we want to kind of structure this thing in a Bulgaria or Ireland? And I talked to all those guys about it, and we ended up saying, no, I don't think we need to do this. We're doing this the right way. So the second option is if there's no comprehensive tax treaties, and again, you can go to any one of these places that have the zero tax, and there are any number of them across the planet, really. Again, Seychelles and Marshall Islands and all those. And then you want to look at a number of different options, different characteristics with these. One of them, for example, might be how easy is it, how quickly can the company be registered? You register companies like same day in St. Lucia.
We got one done in 38 minutes.
Right. 38 minutes, yeah, that's fast. Another one, for example, is do you have to file accounts? Do you have to actually submit returns? In some of these places, they actually, even though if the tax rate is zero or really, really, really low, sometimes they still actually want you to go ahead and file accounts or have some filings every year to maintain some kind of compliance. And maybe you don't really want to do that. Maybe you don't want to have any filings at all. And so you want to look at that. You want to look at certain other things like residency requirements for how the company can be structured and governed. Corporations have directors that run the companies. In certain jurisdictions, like Singapore, for example, requires resident directors, which is usually just some guy that gets paid for virtue of being Singaporean. It doesn't do anything, but you have to have a resident director. In many cases, that can be actually extremely beneficial, which we'll talk about in a minute. Or what kind of entity can be the director. Some places they need an actual living, breathing human being to be a director. You know, the director has to be Rory McNamara, a real human being, as opposed to other places, it can be another company that you might own, or a trust, or something like that. And so that's a factor. And so all these really kind of get into the convenience of the structure. For the sake of simplicity, and then look, at the end of it, you know, you've got cost. How much is it going to cost you? Just remember, it's a package deal. It's like a lot of things. It's like real estate. It's like it's not just the price that you pay, because if you have a lower price, but you have to keep paying a whole lot more every year for all sorts of compliance costs or maybe a little bit of taxes, sometimes it's better to pay a little bit more up front just to get it done and have more convenience and more comfort in what you're doing. Two of them that we'll point out, we've done a lot of business in the Marshall Islands. Marshall Islands is a very convenient jurisdiction. There's no tax. There's no reporting requirements. Anybody can be a director. Anybody can be a shareholder. It's very, very simple, and we've set these things up we've done it for ourselves in same day. And we actually, at this point, we've done so much business and set up so many Marshall Islands companies. We actually now have a direct line with the Marshall Islands now. So we just call them up ourselves, and they register the companies for us. We shoot them an email, and we do it. So we've done it for even a couple of people in this room, and that's one of the things we'll start doing more for folks, is being able to register these companies, because we have a huge discount deal with them that we can pass on to everybody. And so that's one jurisdiction that we like. They're all different. And so one of the things about the Marshall Islands that I want to point out is that Marshall Islands kind of comes out of the whole Micronesia area that was formerly part of the United States. And so they still have very US-centric legal system. It's not the place that I would necessarily recommend if your primary, remember the first presentation that I gave earlier today, if your primary goal is something like asset protection, the Marshall Islands is not the ideal place for you. We'll talk about asset protection a little bit more, but the reason is because Marshall Islands is very U.S.-centric. It has a predominantly U.S.-based legal system. Their entire sort of Supreme Court system, they rely on U.S. Legal opinion. They'll honor U.S. court judgments. Anybody, a creditor can go to the Marshall Islands and send their own U.S.-based legal counsel to the Marshall Islands to argue in front of the court in the Marshall Islands. So again, it's not the place that you want to be if your primary purpose is asset protection. If you're looking for ease and comfort and you want to set up a business, maybe an online business or something, and you want to do that in the Marshall Islands, you're looking for something that's cheap, that's easy, that's convenient, that you can do basically anything you want to do, to be able to open up accounts in places like Singapore or at Ryan's Bank in St. Lucia and so forth. You can do that, and the Marshall Islands is a very convenient option. And it's very inexpensive. St. Lucia is another one that we'll point out. And this is why I asked Rory to be here, because Rory's really taken things a step further. We go back here, in this case, remember one of the things that we always have to ensure is that you're not doing business on behalf of, am I okay? Or you want to jump in?
No.
Okay, good. All right. One of the things you always want to make sure about is if you have a foreign company set up, that you're not doing business, you're not signing your foreign company up to contracts and those sorts of things from the United States on U.S. soil. That's a very, very bad thing. That's the cardinal sin with offshore structures. You definitely don't want to be doing that. Google employs these people. This is like the greatest job in the world.
Oh my God.
They don't.
Clearly, the revenue per person at Google Ireland has to be the highest.
That's got to be billions,
it's absurd,
billions
per person.
Yeah.
Yes.
They keep a very small office, and their job is just sit there. And occasionally they'll sign some documents and things like that because they're concluding contracts and doing these things from Ireland instead of from Mountain View, California. That's the way it works. And so what Rory's able to do is not only not only incorporate the company, anybody can do that. What Rory's able to do is incorporate the company, do it very, very quickly. He does it reliably, credibly, responsibly. He's been very good with us. But also to provide a lot of the back-end things that are necessary to establish greater levels of credibility, and do so at a very, very reasonable price, something that doesn't cost a whole heck of a lot, but gives you, again, that good sense of saying, you know what, it's not just, my company isn't just some manila folder in Rory's filing cabinet. There's actually a real address and real people there, and there's a director and people signing contracts and a secretary and all those sorts of things. And Rory's basically able to provide all that, a real address with a real office and all that, and is able to provide that at a very reasonable fee. You should say something. Say hello to the crowd.
Hi, good afternoon. What I would just add to that is that increasingly what we're seeing in the offshore sphere is that mine management and control is becoming very important, and something that you need to be able to show is taking place offshore. So, we started off in this business 15 years ago, creating offshore companies, which were, as Simon said, literally, companies in a drawer. The person never came to St. Lucia. They never knew anything about me, never knew anything about the business. And we realized that with this increased need for mine management and control, there was a need for office space and having a virtual office in St. Lucia, which gave additional credibility to this IBC in a drawer in Rory's office. And so last year, we actually established an entity called DevMat Corporate Services, which is an affiliate of McNamara Corporate Services. And what we do is we provide, we've rented the top floor of a building, we have office space, small office space for people to have individual offices, and then we have a general secretarial pool, we've got a conference facility, and you can get anything from a PO box, a telephone, dedicated telephone line with a receptionist who answers it. And if you need to be in St. Lucia to conduct business, you can actually utilize the offices and have your own office space without the headache of going and coming and spending hundreds of thousands or $50,000 to find your own office, kit it out with a printer. It's all there. It's all ready to go.
Real company, real office, real people, real phone number, real address. So it goes a long way in providing you a lot of protection and fencing you in on a 0% tax rate. One of the reasons why we really do like St. Lucia, Rob and I have been doing this. We've been all over the world, looking at so many different jurisdictions. We've been having a really great time with St. Lucia. We talked about this a little bit yesterday. But Rory, this is why I asked Rory and Ryan to be here, as we found St. Lucia really to be a one-stop shop where you can do all these things. You can generate the company. You can Rory can do a company basically immediately. You can get the bank account open. You can have the back office support, all those things really all there, one-stop shop, and have it all done, set up, and ready to go. It makes it very, very easy, very efficient.
And just to emphasize what you just said, getting the bank account and knowing that you can get the bank account is critically important, right? Having a foreign company without a bank account is like having a car without a motor, right? You can sit, but it's never going to go anywhere. And the fact that Bank of St. Lucia has been so helpful in setting up accounts for these companies, again, means, I don't like it when people scream at me, but when, I've gone through experiences where people have wanted a jurisdiction, they set up the company, and they can't get a local manager, they can't get a bank account, or they need to do some transaction, they want to get a securities account, they need paperwork, documents notarized, and they can't get it, and then they scream at me, which I don't like. And the great thing about St. Lucia is it is one-stop shopping. We know we can execute. And we can get all the pieces that we need, and it can be done, again, not instantly, but in a very reasonable period of time. And then you can focus on doing your business and not on all the paperwork.
Right. That's ultimately what it comes down to. So, like I said, we've done this all over the world. We've done business with guys in BVI and Seychelles and our friends in the Cayman Islands and Labuan and all this. And it's just been really, there are a lot of similarities between them. In many cases, even between Marshall Islands and St. Lucia, anybody can be a director. There's no tax, there's no reporting, all that. But there's the difference. Really, there's a small price difference. But Rory's a real human being who's able to provide a lot of these services.